Hey y'all, I'm Diamond and I am your new insurance bestie. Okay, I'm here to break down life insurance, mortgage protection, and final expense in a way that actually makes sense. No big words, no financial jargon, just straight talk. I got into this business as a single mom looking for stability, not just for myself, but for my son. Okay, and now I want to help women like you protect what matters most and start building real wealth one decision at a time. So, today we're going to talk about infinite banking. So, let's jump into it. All right, so raise your hand if you have $10,000 in credit card debt. Maybe a little more, maybe a little bit less, but no matter how hard you try, it just feels like you cannot get ahead. Like every time you try to pay the minimum balance or you pay maybe $20 or $30 extra, it's always the exact same thing. And that was me, like swiping to survive, stuck making minimum payments, and exhausted from working so hard just to fall behind every single month. So today I want to show you a strategy that helped me flip the script. And that's how I use a life insurance policy loan to pay off debt and start building something that actually lasts. And no, this is not just for people making six figures or more. I'm talking to the average girl. All right, so what is really going on with the credit card debt? So let's be 100% honest, right? These credit card companies, they are definitely winning, especially in this economic time where things are completely unstable. Your budget is changing on a daily basis. The interest rates are fluctuating. Groceries are fluctuating. X could be $3 one day, $8 the next. You just never know, right? So you have like a 22%, 25, 28% interest rate, and you're stuck in a cycle that really was never meant for you to get out of, right? So every month you pay, and it's like nothing moves. Literally, you get your statement, and you're like, wait a minute, like I thought I was paying down on something, but actually, you did. It's just that the interest caught up with you, right? So it's like trying to mop while you have water on. Like you keep mopping, but the water is still going. So you've really made little to no progress. And no one taught us how to own the faucet. That's where infinite banking really comes in. So here we're going to just talk about what is infinite banking. I'm sure you've seen it on TikTok or you've seen a bunch of different YouTube videos, and a lot of times for me it's frustrating because it's like they always want to use like big terms. Like a lot of people didn't go to business school. They don't have financial backing, or financial literacy or the vocab to really grasp the concept. So I'm not going to do that here. We're just going to talk straight, right? As if we're just two girlfriends having coffee. So, infinite banking is just a strategy where you use a specifically designed life insurance policy, right? Not term, and we'll get to that in later videos, but it's straight life insurance policy, typically whole life, right? Or index universal, which is sometimes abbreviated as IUL to build cash value. So, once this cash grows, you can borrow from it. There's no credit check, there's no approval. You access your own money on your own terms. And the best part is you keep your money growing in the policy even when you're using it. So you're borrowing against it, not from it. All right. So instead of making banks like Chase or Bank of America or Wells Fargo richer, you actually start paying yourself back. Right. So just to break it down even further, here's pretty much how it works. So what you're going to do is you're going to, let's say you want to take out a $10,000 policy loan. What you will do is you will borrow from your life insurance policy instead of borrowing from the bank. So when you do that, let's say that you have a $500,000 face value, okay, death benefit. It will come off of that death benefit. So you'll have your 500,000 death benefit, and they will take off that 10,000. But it isn't like you have to pay it back if you don't want to pay it back. It just is subtracted, right, from that death benefit. Now you can pay it back, and believe that you should. That way, you're just paying yourself back, and you can also pay yourself back interest, but there is no requirement. And that's what makes it such an amazing banking system, is that you have this pot of money that you can borrow from, and you can pay yourself back the way that you want, and it's on your own terms. All right, so I'm going to do a quick example of how I would use a policy loan to pay off $10,000, right? And we're going to walk through exactly what this could look like. So, all right, here's the example. So, the policy face value, your death benefit, right? What your beneficiary receives when you pass away. So, we have it at $450,000. Let's say that your monthly premium, right? So, what you're going to pay every month in order to maintain this policy is going to be $160. All right, so that's the base. Then we're going to add something called paid up additions. So, paid up additions are basically dividends, right? That are going to add value to your policy in so many words. And I'll also go over another video in detail of exactly what paid up additions are. But for the purposes of this video right here, we're going to just talk about how paid up additions are going to be the added premium. Okay, so you have your base premium, and that's just the base to cover that 450,000. And then you have your paid up additions that are going to be added premiums. So they are going to accelerate your ability to take cash value out because you're adding more money. You only need to do 160 in order to get that 450,000 death benefit, right? But that's when you die. So if you just paid that 160 on the base, you probably wouldn't have access to that 450,000 for 30, 40, 50 years. But when you're adding the premium, right? So that $300, you're doing an additional every month, an additional on top of that 160, an additional $300. You're accelerating your access to the cash. Okay, so now instead of 160, your monthly premium is at $460. So multiply that by 12. Your annual contribution is $5,520. Okay, so this is a policy that's properly designed that will give you that base at 160, and it'll do additional premium to advance that cash value so that you're able to borrow from the policy a lot quicker, right? And that's what we want when we're doing infinite banking. All right, I think I just added this slide in here by accident, so we're gonna hold on. Let me see. I think one of my slides actually deleted here. Anyway, it doesn't matter. This is a duplicate slide, but my next slide was really just going to speak on so what happens if you actually are unable to afford that 460 a month, right? Because if we're $10,000 in debt, there's a chance that we just don't have an additional 460, because the 460 is not like, oh, I'm going to pay the 460 and I'm not going to pay the rest of my bills, or I'm going to pay the 460 and I'm not going to pay my credit card. Those are things that you have to pay in addition to that whole life insurance policy premium. So what happens if we are unable to make that $460 amount? I have a solution, and I think that what we should actually do is just start with basic protection, right? You can start with something like a final expense or a mortgage protection policy that will go down to around $40 to $60 a month, just to make sure that your family is protected. A lot of people don't have an additional 460 to start, so the infinite banking wouldn't exactly work for that particular budget, but you can start, right? You can start. And I think that if you just start with the $160 and then you work your way up, right? So you can adjust the additional premiums that we talked about. In my example, it was $300. You don't have to start with $300. That was just a way to accelerate, but you could start with $10. You could start with $20. You could start with, 30. Like you can start small and then work your way up, right? So here, some of my clients, they use like tax refunds, bonuses, like they have side hustles, money to add to their policy later on. Others wait until their debt is reduced and then they scale up. But the important thing is that you don't wait until everything is 100% perfect, right? You just start. Just begin and begin where you are. Start building something small and grow as you grow. So, my option would be to start with basic protection first. And if you're not quite ready for banking yet, then there's still a step forward. We can start with the final expense. And like I said, those policies are going to be on the lower end for around $40 to $60 a month for like a final expense protection or a mortgage protection, just to make sure that your family is protected. And then once you're ready to get going, you're able to add that additional premium. And what's great about starting now is that insurance is based upon your age, right where you are. So if you start at your age, you'll have a lower premium for all the same benefits than you would if you started 2 years from now, 3 years from now, four, five. You're going to have a much lower premium than that. So I always recommend getting started and then scaling up. All right. Either way, you're moving from being stuck in a situation to moving towards the end of controlling your own situation. All right, so I made a free worksheet that breaks all this down for you, and it's called your first 10K Infinite Banking Debt Strategy Worksheet. And it's going to help you map out how much debt you can eliminate and how you can make this strategy real, even if you are just starting out small. So if you want help designing your free policy, make sure you click the link in the description to book a call with us, and we'll go over all the numbers together and we can build out something that works specifically for you. Every policy is not one size fits all, and we definitely can work out something that's for your budget, that's for your family, and that's going to be great, for you to do. So if this helped you, make sure you hit that like button and subscribe for more on building wealth and protecting what matters. Have a great day.